Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Tim Bratz. Tim is the CEO and founder of Legacy Wealth Holdings, a real estate investment company that acquires and transforms distressed apartment buildings into high-yield assets for their own portfolio. Tim's current portfolio exceeds 4,000 units with a valuation of over $350 million. So thank you so much for being on the show, Tim.
I'm excited to be here, bud. How are you?
I'm doing well. It's awesome to connect. And tell us a little bit about your background, both personally and professionally, prior to getting involved with real estate investing.
Yeah, man. Well, again, appreciate you having me here, and excited to drop some knowledge if I possibly can, share some value. So, dude, I'm a kid from Cleveland, Ohio, right? Grew up in a blue collar suburb of Cleveland, working class parents, working class family. Went to college 03 to 07, and that was when the market was going crazy and everybody's making money in real estate. And I was very money motivated kid when I was 20 years old. So I graduated from college in 07. I moved out to New York City, just kind of on a whim. My brother lived out there, so I lived with him, and I thought you got involved in real estate by getting a real estate license. So got my real estate license and somehow ended up with a commercial brokerage handling leasing for businesses and landlords. And so we did like office leases and retail leases. And I just kind of brokered that stuff for about 12 months, and it took me like 8 months to close my first deal. It was a little dumpy 400 square foot space on a side street in Greenwich Village, and signed a lease for $10,000 a month on a 12-year lease term. And I'm like, holy smokes, like I need to be on that side of the coin. I need to be owning real estate, not brokering it. And so I decided to move out of New York. It was just a bad winter and everything was expensive. So I moved down to Charleston, South Carolina in 2008, and decided I want to be a real estate investor. And I read all the books and I sign up for all the courses and I go through analysis paralysis for 6-7 months and realize I'm not going to learn how to invest in real estate by reading about investing in a book. And I need to actually take action. I need to jump in the water. You can't learn how to swim by just reading about swimming. You got to actually get in the water and start treading water. And that's what I ended up doing, man. I found that this is right after the market crashed. I found the cheapest house on the MLS. I go in, I lowball it, go back and forth, and I bought a little dumpy duplex in the hood for $14,000 on my credit card. And then just kind of cleaned it up, physically did all the work myself to it, held an open house. One of the neighbors came in and bought it for $33,000. So I made about 14 grand after all was said and done. And I was like, dude, I don't even know what I'm doing. And I'm making money in this real estate market, right? Like I'm a punk 23-year-old kid, never done a deal before. It's the worst housing market ever. And I'm like, let's go do it again. So then I got into like wholesaling, and I learned how to find really good deals. I mean, they were everywhere, right? Back then. It was really hard to find money. And so you had to start getting creative and creatively structuring deals. And eventually met some people who had cash, but they didn't have the experience or the time or the expertise and the knowledge and the skill set to go out and do these deals. And I did the work, they brought the money, and we came up with some sort of fair, equitable split on doing deals. And so that's kind of what got me going, man. And fast forward, since I sent you the update on the stats, I bought it for 552 doors since then. And yeah, so we're at 4,840 units as of today, and a little over $425 million of portfolio value.
Awesome. And where is the majority of that located?
Southeast, and I got a lot in like Texas, Oklahoma area. Not a lot. I'd say, I don't know, 20% of my portfolio is in Texas, Oklahoma, and then majority of it's in the Southeast, probably 60% of my portfolio.
Nice. So Southeast and some of the Mid-South. So those are awesome markets. We like those markets too. So why did you make the switch to building a portfolio versus fix and flips and wholesaling and everything else you had going on like 10, 15 years ago?
Yeah, man. So, I think when you see real estate, I think everybody has the allure of the residual income and the passive income, but then we all think we got to go and stockpile our own cash in order to get into the buy and hold type stuff. And which is not the case, right? But that's the trap that I fell into. And I got into flipping houses, I got into wholesaling houses, the whole transactional type of trap. And did all right. Like I wasn't good at flipping like the HGTV stuff, but we did like turnkey houses. So I would buy a single family rental house, fix it all up, put a tenant in place, package it with management, and then sell it to some entrepreneur or white collar professional who just wanted like a turnkey house, right? And so we were doing somewhere between 80 to 100 of those per year. It was good, kept food on the table, kept the lights on, and I was passively investing or raising money for and sponsoring loans for some apartment buildings. I took down some small buildings myself. And in late 2017 or summer of 2017, I sat back on vacation one morning. I was looking at my goals and looking at my net worth, and I realized, dude, 90% of my net worth came from my apartments, and it was about 10% of my time. And I'm like, dude, can you imagine if we dedicated all these resources over here that we're using in flipping houses and put them all towards buying apartment buildings and holding apartment buildings? Like, can you imagine how much growth we would have? And that's exactly what happened. Like, I just drew a line in the sand. We burned the ships on all the single family stuff we were doing, and we only focused on apartment buildings. You know what happened? An 11 unit popped up, and a 20 unit, and an 18 unit. And then all of a sudden we started compounding and growing and bought a 48 unit. And then I bought a 72 unit portfolio. And then I picked up a couple hundred units over the course of the next few months. And then I was at, I don't know, 600 doors or something. And then I took down a portfolio of 730 units in the summer of 2018. So less than 12 months later. And that's what really kind of put me on the map. That put me over it put me at like 1,300 doors. And really what got me a lot of attention on social media and stuff. So that then turned into people asking me to coach them and mentor them and do that kind of jazz. And so I put together a little bit of like a coaching platform that teaches people how to scale into apartments. And that has led to a ton of deal flow and a ton of investors for more projects. So we've just kind of amplified what we've done. So by the end of 2018, I was at 1,600 units. I picked up almost another 2,000 doors in 2019. Another 1,000 doors in 2020, despite what happened with COVID last year, and another almost 600 doors this year.
Oh, fantastic. So for you scaling so fast, was it because, did you have other partners that were handling other parts of the business, or what is your specialty when it comes to it? Are you an underwriter? It sounds like you're more of the face of the business for raising money. Yeah.
Great question. And what I think a lot of people get caught up on coming from residential into multifamily is, in the single family world, it's hard to carve up 20 or 30 grand of profit with a bunch of A players on your team, so it's like a solo kind of type of a business. When you get into multifamily or commercial, it's a lot more of a team sport, and it's more exciting because you're talking about not 30 grand, you're talking about $3 million of profit in a given deal. So you can attract those A players, and it makes everybody excited and gets their attention because you're talking about big dollar amounts. And so exactly to your point, man, what I ended up doing is I brought in A players. They handled the stuff that I was not good at. I handled the stuff and stayed in my lane of the things that I liked doing and what I was really good at. And that's this, right? That's being active on social media, and it's educating. And that then leads to deal flow. So I was able to hand that off to my acquisitions guy. It leads to money flow, which I was able to hand off to my chief investment officer. And I still raise a lot of money. That's really my forte. And then, suppliers and vendors and contractors, I was able to hand off to my COO, and he was able to kind of just continue refining that part of our business. So, I see all those guys as kind of the engines of my business, and I'm like the fuel that feeds all of them. So everything would run great. I'm not needed from a day-to-day operation standpoint. But when we are actively buying or actively selling, I'm the loan sponsor, right? I sign on 4,800 doors. I am a general partner on all of them. I'm a loan sponsor on 95% and a managing member on 95% of them. So it's not like I have a little bit of equity. Like I have a majority of the equity in all those different projects. So I am needed on the acquisition and the disposition side of things. But from a day-to-day standpoint, the team, man, they've been crushing it. And I'm super blessed to be surrounded by great people.
So what type of processes and systems have you put in place that allow you to step back from the day to day? Because I think that's everyone's dream, and especially when you're getting into real estate investing, especially if someone's a flipper. And I know that adult daycare they call flipping houses. What a headache it is.
Yeah, man, it's a lot of work. That's another great question. It doesn't happen overnight, right? I was really bad at real estate for 8 years, and I fumbled and messed up and screwed up over and over and over again. And every time I did, I sharpened the axe a little bit. I got a little bit better. I didn't make that mistake a second time. I hired an assistant before I hired a COO, right? I hired a project manager before I ever hired an in-house attorney, right? I took little steps of hiring one person at a time, and I didn't hire them for that role. I hired them for 2 roles above where they were, right? My COO, we used to co-wholesale together, and I saw the guy's work ethic, and I was like, dude, I can't afford to not have him on my team anymore. My chief investment officer used to be my business attorney. That was just, he'd handle evictions for me and some other stuff. And then he passively loaned me money once in a while. And I realized, dude, you could handle the entire capital raising side of things. And I brought him in-house about 2.5 years ago. But he was my business attorney for 7 years first. And I had to give up equity. I think a lot of people get caught up in, I want to own 100% of it, but they own 100% of a grape. I'd rather own 25% of a watermelon. There's a lot more juice in the squeeze of 25% of a watermelon than in 100% of a grape. And so you realize guys like Elon Musk only owns 22% of Tesla. Jeff Bezos owns 11% of Amazon. And when you think about that, they're the 2 richest, wealthiest people in the entire world, and they only own that much of their business. That means, there's something to bringing on A players, giving up a little bit of equity, and kind of biting that bullet, because it's not about this deal, right? It's about what does this deal set you up to do for the next 10, 50, 100 deals that you can do because you gave up a little bit more equity on this one. And it's easy to do in commercial real estate. You don't have to get married across your entire portfolio. You do one deal with somebody, you and I do a deal together. And if we like doing business, guess what? We could do another deal together. If it doesn't fit, then we sell that deal and we move on with life, but it's easy to do in the commercial side. So that's what I ended up doing. I ended up joint venturing, and, students would bring me a deal. They could handle project management, property management. I could bring loan sponsorship, capital to the deal, asset management, kind of help capital manage and do some of those things. And so it allowed us to stay in our lane, allowed them to do their thing. And dude, when you do that, 1 + 1 = 3. You can accomplish a lot more as a team.
Yeah, it's funny you say that. I was having coffee with a really wealthy guy a couple years ago, and he was telling me we had met a couple months before, and he was saying he was all pumped about buying this business. And then I met him 3 months later, and he's like, no, I never went through with it. And I was like, why? He's like, I can't find the right person to run it. If I can't find the right person to run it, I don't do it. Yep. And it's completely different from someone that might not be as savvy, let's say, and they're just looking at straight numbers, but they want someone that's a rock star that's going to run this new investment for them, because they're not the one that's going to go run it, right? And so it's completely true about aligning yourself with people that are doing what their specialty is and spending and focusing on doing that versus something else, right? Or wearing too many hats, which is a huge mistake because you're not going to be great at all of them.
No, man. I mean, you think about Jeff Bezos, Elon Musk, Warren Buffett, dude, they have the same 24 hours in a day that we do. How do they accomplish so much more? And likewise, the homeless guy asking for money, he's got the same 24 hours in a day that we do. How come he's accomplishing so much less? It's what are the activities that you're focused on, and what is the highest and best use of your time? And, there's charts out there that show $10 an hour tasks, $100 an hour tasks, $1,000 an hour tasks, $10,000 an hour tasks. And I'm very focused and very disciplined with only spending my time on $10,000 an hour and better tasks. If it's anything less than that, I staff it out. I give it to somebody on my team, or I just delete it altogether from my life.
Yeah, that's great. Yeah, especially when you start becoming successful, then all these different shiny objects come into your view, whether it's from other people trying to get you involved with what they're doing. And you got to somebody called me, it was actually early today about that. And I was like, nope, this is what we're doing. I'm not changing how we work with, you got to stay in what your lane is. And, the focus is power, right? Tony Robbins. So,
dude, the difference between successful people and really successful people is really successful people saying no to almost everything.
Yeah, true. Very, very true. And you can look back at like Bezos, Gates, all these kind of people, and how many successful organizations or businesses have they built? I mean, Bill Gates did one business for like most of his life, and then he went and did his foundation. So it's like they did one thing really, really well, and then they went on. And amazing people they brought along with them to run that first business. So you coach a lot of new investors. What would you suggest to a new investor that wants to start flipping houses or building a rental portfolio?
Oh man. So I actually don't do a lot of like newbie type coaching. Actually, a lot of the people that I coach are already doing real estate in some capacity, and they're looking to get into buy and hold type stuff. However, I just got a TikTok account and I'm more active on Instagram now. So I got a lot of young kids who are hitting me up saying, hey, I'm 15, I'm 18, I'm 22, and I want to get involved in real estate. I love what you're doing, and I want to do exactly that. Like, what advice would you give me? So anyways, I'm thinking about coming out with just some content. I'll probably give it away. I'm not even gonna charge for it or anything, about like, getting into rental properties and what that looks like. But I think early on, man, I would focus on the revenue generating activities. I think that's one of those things people get involved in. They start their business and they think, getting a website is doing the business, or ordering business cards is doing the business, or, going to networking events, which has some value to it, obviously, is doing it. But dude, you know what does deals? Like, there's only 3 actions that actually make you money in real estate: sourcing deals, sourcing capital, and refining your operations, or like dispositions, essentially, depending on if you're holding or selling. So like, dude, if you're not, the only action in sourcing deals that you can control, because you can't control how many deals actually close because there's so many other variables that come into the mix, but you can control how many offers you make. That is the most important metric that you can be measuring. So if you are a newbie and you want to get involved in real estate, like, I would be obsessed over making 10 offers every single day, every day, 5 days a week minimum. And eventually what will happen is a ratio will appear. If you make 50 offers a week, that's 200 offers a month. And all of a sudden you got 4 deals out of it. Guess what? You know that if you want to do 8 deals next month, you need to make 20 offers a day and do 400 offers, right, that month. And eventually a ratio will appear where it offers predictability to how much revenue you can generate and how many deals you can do. So you always need to be sourcing deals. That's the most important thing that especially anybody can be doing in this market right now. When I first got started, sourcing capital was really, really tough. It was easy to find deals, but sourcing capital. So I've always been focused on doing both of them because I know how hard it was when there wasn't money on the streets. Now there's a lot of money on the streets, but it's a lot harder to find deals. And then there's, once you have the deal, like, that's cool. You bought an apartment building or you bought a rental, like, now you got to keep it, which is where the real work begins. And you got to have dialed in operations, standard operating procedures, good partners, somebody who knows what they're doing on that side of the coin to make sure that they're focused on that side. But the money-making thing, the money-making things are sourcing deals and raising money. And then you can find great partners to operate. That a lot of times becomes the bottleneck, but it's a really important piece because if you're not doing that, everything else is pointless.
Yeah, if you're raising capital, I mean, it's not going to be your highest and best use going out to project manage and dealing with general contractors and all that stuff. But you'll have someone on there that will do it great and likes spending that time and likes visiting the properties and likes all that, the management that goes with it. And it's just kind of finding that person and aligning them into your team. So that's awesome. So what are common mistakes you see real estate investors make other than spending time doing activities that will not generate revenue?
Oh, man. I would say the first one that comes to mind is skimping on due diligence, right? Like, a lot of times when you get started, people like, they don't want to outlay the cash for a deal that they're not sure they're gonna acquire, and so they don't have the plumbing line scoped. They don't bring out an electrician to look at the electrical panels. They don't bring out an HVAC tech in order to review all the mechanicals. They don't, do a thermal scan of the roof because they don't want to spend $2,000 or whatever it is. And so, like, I see them skimping on that, and then all of a sudden they get into a deal that there's a lot of unknowns and there's a lot of surprises, and that deal kicks them in the crotch. spend the money. Like, it's much better to spend a couple $1,000s and do the deal the right way, and then walk away from it and only lose $2,000 versus $20,000 or $200,000 or, God forbid, $2 million, because you didn't do all the due diligence. And then from there, the other thing that I would say is, like, a lot of people, they're like, oh, well, they try to force deals to happen, right? And they try to push the rents because if I can get, $975 instead of $950, oh, this deal will work. No. I go the opposite direction. I go down to $900. I try to kill the deal. And I stress test all the different numbers, the rental rates, the cap rates, the interest rates, the expenses, and all that stuff. I stress test the heck out of it. And if I cannot kill the deal, that's when I know it's a good deal, right? Like, so I try to kill it. I try to find any way for it to not work. I don't try to force the numbers to make it work, because then everything's got to go perfect. Dude, I got one deal. Actually, the 700 unit portfolio I bought almost 3 years ago. Dude, it was a heavy value add, a big lift. There's a lot of work that went into it. We got, I was early in my career, so I didn't have the best financing terms. It was a big deal. And if everything went perfect, it would have been smoking returns for the investors. 40% annualized, 50% annualized returns for the investors. And what happened was, like, dude, right as we were coming down, rounding third base, COVID hit, and it extended out the renovation project. Like, we couldn't get all the appliances in. So then it delayed, and we had bad financing, which was really expensive. And then some of the tenant base was more C-class, so it was a little bit of a heavy management intensive, and they started gaming the rents and not paying, and it just got delayed by about 12 months, which ate up a bunch of the profit in the deal. And I had a conversation 2 days ago with the investors. I said, hey guys, it was a heavy lift. We knew that going into it. And the good news is we stress tested the hell out of the numbers. And we're coming in a little bit shy of what we hoped the value would be. And the budget's a little bit more than what we hoped it would be. But guess what? Your annualized year over year return is going to be north of 20% as a worst case scenario on this deal. Is that good or bad? Oh my God, that's amazing, right? Because I stress tested it. If I would have forced the numbers to happen on a deal like that, and essentially, like, the investors either would not have made a return or potentially even lost money because you don't stress test the numbers. Try to kill the deal.
Yeah. Well, how did you find that portfolio?
So this is like 2000, when did I buy it? Early 2018, or like summer of 2018. Contracted it in early 2018, which is before, like, apartments became kind of mainstream and cool. It was like right during that time frame. And because it was like 50% occupied in like a tertiary market of Georgia, it's just, dude, it wasn't a market that the hedge funds and REITs wanted to go in. It was too much work for them to want to roll up their sleeves and get their hands dirty. And it was too big of a portfolio and too much work for some of the smaller guys to qualify for. And I had performed on some deals in the local market there, and had a little bit of a reputation with the brokers of closing on some difficult deals. And so it got brought to me. So they brought the deal to me. The seller took a haircut on the sales price. We were not the highest offer, but they knew that we would get the deal done, and we closed on it. And so we closed on it, got it for a great price point, but had to put a boatload of money into it. So it's been a process and a great experience. It kind of catapulted me to get to where I am today. And but it wasn't the best deal I've ever done either. Yeah. And we were talking offline before we got rolling. Like, those are some of the properties I'm selling right now, just because they're heavy management intensive.
Yeah. All right. Cool. So what do you think are the main factors that have contributed to your success, Tim?
Oh man. I would say, dude, I got involved in real estate, and that's the only thing I've ever known. So ever since college, the only thing I've ever been educated on has been real estate. So I didn't really have like a backup plan when things got hard, when things got tough, when I walked into houses and roaches fell on my head, or I walked out of houses with fleas up to my knees, when contractors burned me, when tenants chased me out of buildings with baseball bats, like when lenders bailed the 3 days before closing. I couldn't quit, right? I just didn't have anything to retreat to. So I had to push through and I had to make it happen. So I think, not quitting and just having the tenacity to see things through. It's easy, dude, for everybody to start, right? Everybody's got the ambition to start, but not a lot of people have the perseverance to stay. And I had the perseverance to stay. I just saw it through. I don't know if it's because I'm tough or it's just because I didn't have anything to retreat to, but I just kept staying with it. And real estate's not an experiment, man. Like, this is something that's time tested and true, and you will build wild amounts of wealth if you just stick with it and keep on doing the activities, right? That's the other thing I'd say. I focused on, once I understood what the actionable revenue generating activities were, that's what I focused on. I just doubled down on those and then hired people to make sure that those were just obsessed over. And now I'm kind of at a place in my business where I actually do the activities that are not quantifiable. Me and you hanging out on here, we were talking offline about your buddy who's right up the road from me, and who knows, we might do some deals together. Maybe I'll bring capital to one of your projects or buy a deal from you or vice versa. And I don't know, it's not quantifiable, right? But like, that's the stuff that I spend my time on, because it could turn into a seed that's planted today that blossoms 2 years from now, 20 years from now, 2 months from now, who knows? That you don't even know how much opportunity could come from it. So this is what I focus on now, is like the non-quantifiable things, but that's because I have people in place to do the revenue generating quantifiable measurements.
Nice. So you talk about 3 actions to be successful in commercial multifamily, or in commercial real estate in general, let's just say. What are these?
That's going back to kind of what I said before: sourcing deals, sourcing money, and refining operations. That's what I would really focus on. If you're trying to buy and hold, or you're trying to buy and sell, the only thing that would change is, instead of refining your operations, just work on selling, right? Like finding buyers for your properties. But I think if you focus on those activities, man, you're going to be in really good shape. You're doing the things that actually count, which is, making offers and prospecting or having conversations with potential private money lenders. If you make, I don't know, 2 to 5 offers every day, and you talk to 2 to 5 prospective money lenders every single day, dude, it will compound so rapidly. Your mind will be blown at the opportunities that you have in the next 90 to 180 days. It'll be like, oh my gosh, there's so much money out there. Oh my gosh, there's so much opportunity out there. And like, you'll be taking deals down. All you got to do is those activities.
Yeah, it's funny because we track our KPIs and stuff, and you have like and I have some other KPIs personally that I keep for our business. And after a while, you see, after like a year, you see where you were and what's happening. And this week was good, and this one wasn't as good, but you actually see the progress. And I mean, it's amazing, because when people talk to me about commercial real estate, I always tell them it's the competitive advantage is relationships and sourcing cash. So if you can do those two, it's, if you have the relationships, you now have that competitive advantage against someone new that comes in, because you have relationships with brokers, property managers, all these different people, especially if you're in a market and you have tons of units there already. And then if you can source cash to close on it, I mean, you've put yourself ahead of so many other people just focusing on those 2 simple things. So I totally agree with you. So how can our listeners learn more about you and your business, Tim?
I'm active on social media. Hit me up on Facebook. Instagram is where I'm most active. I also have accounts on LinkedIn and TikTok, and I have a YouTube channel called Legacy Wealth. And I mean, listen, I answer all my own messages on Facebook and Instagram. So if anybody has questions, hit me up. I'm happy to kind of point you in the right direction, support. I put out a ton of content about buying apartment buildings, really like more wealth building and entrepreneurship and even personal development, lifestyle design type stuff that helped get me to where I am. And I think if it helped get me to where I am and I can help other people get there too, I think there's, it doesn't create competition if I teach other people how to buy apartments. It actually creates more collaboration, because people want a joint venture. They want to do deals. It helps them get into deals that they couldn't have gotten into. It helps me get into deals that I couldn't have gotten into. And all of a sudden we're able to build wealth together. So I'm always just trying to, connect with great people, great entrepreneurs, people who are moving in the same direction and have common goals and ambitions.
Yeah. I think people, when they get into commercial real estate, they're trying to, some people that are unsuccessful to try to do it themselves. And you have to kind of give into, now I need partners. And that's when you have people reach out to you and say, hey, I've got a deal here, or if I find a deal. And that's what's great about doing all the networking and everything with social media. So thank you so much for coming on today, Tim. Have a great rest of your week. And hopefully we can connect here in the future, face-to-face.
Appreciate you, brother. Thank you for having me.
Talk to you soon.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.